Hello guys, we are from group 6 and we will discuss about fiscal reconciliation. But first, let me introduce our group member. The first one is Ardi Kurniawan, Anggino Faisya, and also we have Takyudin Amri, and last but not least, it's me, Clara Molina Sibarani, and I will be the first presenter for today. So fiscal reconciliation means a step to match when there are different things between commercial financial statement and fiscal statement, and the preparation of company financial statements must of course be adjusted to the applicable fiscal regulation, especially when the financial statements are used as the basis for making SPT PPH, which will be reported to the tax office. Financial reports are generally prepared based on financial accounting standards, which are not necessarily the same and in accordance with the tax regulation or provisions. Therefore, fiscal correction is needed, or what is commonly known as fiscal reconciliation. In this slide, we discuss about the nature of reconciliation. So, the implementation of bookkeeping based on the company accounting policy differs from the taxation provisions, and differences arise related to the recognition of income and expenses in the income statement, or differences in income concept, and then adjustments are required to calculate taxable income from accounting profits that the company has reported. Why we need reconciliation? So, fiscal reconciliation due by WP or entity or personal person who is obligated to hold a bookkeeping because there are differences in calculation, especially profit by accounting or commercial, and profit according to taxation or fiscal. Commercial or business labs are intended to assess the economic performance and financial condition of the private sector prepared based on the PABU, namely SAK. The first is income statement. Fiscal is more intended to calculate taxes prepared based on tax regulation or UU-PPH. The second one is the basic difference in the preparation of the QLAB result in a difference in the calculation of profit or loss of entity or WP. The third is, and the last is, fiscal reconciliation is done to facilitate the filing of annual SPT PPH and compile fiscal lab as an attachment to the annual SPT. About the background difference, accounting and taxes are defined by different authorities and with different purposes. The difference between accounting and taxes not only occurs in Indonesia, but also occurs in the other countries. Tax research related to the tax book. First is what causes BTG, and the second is what are the consequences of BTG. Next is profit persistence, return persistence, value information of BTG, and the last is whether BTG can be considered as a tool to do earning management. The difference outlined about PSAK and law or UU we can see in our slide. And difference adjustment step is accounting income. The first is plus unrecognized earning to deducted income that is not a tax subject, and then we add non-deductible costs and deductible fees that have not been charged, and deducted income is subject to final PPH. Then we plus the cost of 3M, final income to taxable income or PKP, and then calculate the current tax burden, and then we report deferred taxes.
Assalamualaikum warahmatullahi wabarakatuh. I am Anggino Faisya Azmir and I will continue the presentations.
So on the accounting side, it is profitable because it will attract potential shareholders and the public company will prioritize these interests. But on the tax side, it is not profitable because it increases the tax burden that must be paid. So what is deductible expense? Deductible expense are those that can be subtracted from a company's income before it is subject to taxation. So here about Article 6 of the PPH law, and the first is the magnitude of the taxable income from taxpayer in the country and a permanent establishment is determined based on the gross income minus the cost to get, collect, and maintain income, and including A. the cost that is directly or indirectly related to business activities, B. depreciation on spending to acquire tangible assets, and amortization expense to obtain the right, and on the other costs that have a useful life of more than 1 year as referred to in Article 11 and Article 11A. C. contributions to the pension funds whose establishment was approved by the Minister of Finance, and loss due to the sale or transfer of property owned and used in the company or which are owned to earn, collect, and maintain income. And E. Foreign exchange loss foreign currency. And F. The cost of research and development companies in Indonesia. And the next, the cost of scholarships, internships, and training. And the last, accounts receivables, which obviously cannot be charged. So the next, donation in the framework of the national disaster, the provisions are regulated by government regulations, and donations in the framework of the research and development carried out in Indonesia, which provisions are regulated by government regulations, and also the cost of the construction of social infrastructure provisions are regulated by the rules government, and donation of the educational facilities, which provisions are regulated by the rules government. And also the last is donations in the context of sport coaching, that is provisions are regulated by the government regulations. Number 2, if the gross income after the deduction referred to in paragraph 1 obtain a loss, the loss is compensated for by income start of the tax year next in a row up to 5 years. And number 3, to a private person as a taxpayer in the country, given the reduction of taxable income as referred to in Article 7. So non-deductible expenses are simply the ones that cannot be subtracted.
Alright, I will continue the explanation. So for the non-deductible expense, number 1 is distribution of income by name and in any form. Number 2 is the cost for the benefit of private shareholders, allies, and members. Number 3 is the formation or fertilizing the reserve fund. Number 4, the granting of natural and enjoyment. Number 5, the amount that exceeds the reasonableness of which is paid to shareholders or related parties as compensation in connection with the work performed. Number 6 is the treasures that were donated, help, or donations. Number 7, income tax. Number 8, the cost of the imposed or incurred for personal interest, like salaries paid to the members of the fellowship, firm, or company whose capital is not divided into shares. Number 9, sanction tax administration. And for number 10 is cost to earn, collect, and maintain income. Like, it is not an object of taxation, and also the imposition of the tax is final. And or charge tax based on the norm of the calculation of net income as referred to in Article number 14 of the Income Tax ACT and the norm of special taxation referred to in Article number 15 of the Law of Income Tax. So the next is reconciliation technique. Reconciliation is done by making a fiscal income statement from the accounting income statement. The profit or loss accounting is adjusted to its correction to obtain the value of revenue or expense according to the fiscal. This is appropriate for tax purpose, and the correction are made by adding or subtracting the corrected value of the profit before tax. This correction technique is presented in the notes in the financial statement. In the practical world, more reconciliation techniques are used for the purpose of filling SPT, but the presentation in the notes of financial statement using positive or negative correction techniques on pre-tax profits. So for the reconciliation technique, number 1 is if the income is recognized according to accounting but not recognized according to the fiscal, the reconciliation is done with subtracting the income from the amount of income according to accounting, which means reducing the accounting profit. Number 2, if income unrecognized according to accounting but recognized according to the fiscal, the reconciliation is done with the added income on the amount of income according to accounting, which means add to the accounting profit. Number 3, if the cost is recognized according to accounting but not recognized according to the fiscal, the reconciliation is done with subtracting this cost from the amount of the cost according to the accounting, which means add to the accounting's profit. And number 4, if the cost is not recognized according to accounting but recognized according to the fiscal, The reconciliation is done with adding those costs in the amount of the cost according to the accounting, which means reducing the accounting profit. Okay, the next is the case that will be explained by my friend Arti.
Okay, so here we will discuss fiscal reconciliation case. So in this case, I will take a Peter is engaged in the trading business of batik cloth that is taxpayer live in Pekalongan. Data report financial year 2009. So here is case Indonesian. So I'm using case in Indonesian. So here just information how can this nominal come from, and how what number came from, and also for this is just profit, operational profit, and profit before the tax. So the following description that explains the detail of the first experiment contained in the financial statement article is the company record sales based on the principle of accrual. So I will not I will not explain all of the information related to the case. So I will explain the most important point and the point of this case. So I have write the important thing in this case. The first one is the company record sales based on the principle of accrual, and then method the company used for merchandise inventory is with FIFO method, and for depreciation using straight line method. Also for this is just information how number is come from, and also for this slide, and also this slide. So this slide just focus on the case, so you can read by yourself. And so the case question is how is fiscal reconciliation established over PT-RKQ? How to calculate fiscal reconciliation in PT-RKQ? So if you look at this slide, you can see that they have positive correction and negative correction. So I will not explain one by one because this will take a long time. So I will explain what account should we adjust and what should we do a change and make a correction for this account. So the first one, should we have adjust in their income statement is the correction is positive above the cost of telephone. So the account is cost of telephone, water, and electric bill marketing. And the second one is the depreciation of the field marketing according to the accounting. So once again, I said that I will not explain the number or how can the number come from. I believe you can see by yourself, but I make sure that I just explain what account should we adjust and should we make a reconciliation. And after you get it, this account, you will be okay, and you will understand what should we adjust in this case. So I repeat again, the first thing that you need to adjust is the correction positive with the cost of telephone, water, and electric bill marketing, depreciation of the field marketing according to accounting. Is it related to deductible expense? If you still remember what my friend explained before. And the third one is correction positive with the depreciation of the field of marketing, and also correction positive with the cost of office rent. And next, depreciation positive G&A according to the fiscal. So for your information, the building of the old factory are not depreciated according to the fiscal because the limit has passed the fiscal benefit for 20 years. So this will be negative correction. The next is correction positive above the depreciation of the field of GAA. Depreciation according to accounting, we might minus a depreciation according to fiscal. And the next is the correction is positive above the cost of royalty. So after royalty we adjust and make a reconciliation fiscal. And then correction negative on dividend from Bremen H, and also for principal deposit and loan principal, we make a negative correction. And then interest on loan that may be charged and positive correction of loan interest. So interest on loan, we deduct on income statement because it will deduct our tax nominal. So that's why we need a positive correction of loan interest. Thank you. Maybe easy, just information to you. Thank you for your attention, and